Get Rich Education is brought to you by Reef Oil and Gas Companies, partners in American energy production for world consumption.
Welcome to Get Rich Education with Keith Weinhold, giving you information and ideas on the investment that has turned more ordinary people into millionaires and billionaires than anything else, and can provide you with more wealth and happiness than you ever thought possible. Now, here's your host, investor, entrepreneur, business owner, and educator, Keith Weinhold.
Welcome to Get Rich Education, show number 14. I am your host, Keith Weinhold. Welcome to the show where I've just been giving it all away. All my best wealth-building ideas are being shared right here. Since buying my first apartment building more than 12 years ago, I've been lucky. I've had a lot of success, and I've since expanded nationally and internationally. And I'm just giving you my best accumulated wealth-building knowledge, strategy, ideas, experience, all the good stuff in a fun, straightforward, and motivational way. And I've been hooking you up with my trusted contacts along the way here. I've started bringing them onto the show as guests so that my contacts can be yours. My goal is to make you more successful than me, faster than me. Speaking of success, it seems that a lot of investors only want to talk about their success, whether it's pride or ego or whatever. Some people want to hide their failures. Well, hiding failures is not real. It's not authentic. It's not true to life. No matter how well-known or reputable an investor is, Donald Trump, Warren Buffett, Robert Kiyosaki, well, every one of those guys have lots of failures. In fact, often it's those that fail fastest that often find success soonest. You know, every piece of investment real estate that I've ever owned had provided me with a significant financial benefit. Every one. I've had a great record. Straight up undefeated, dude. Until now. I sold a property yesterday, a loser. A property that when I bought it a few years ago, it appeared that it was going to provide positive monthly cash flow. It did on paper. But almost from day one then, it went negative and it never went positive again. It was a failure. I sold it at a loss overall. During those years that I owned it, it provided more financial drag than financial benefit. And I'm a high-speed, low-drag kind of guy. It was a 2,300 square foot single family brick home in Texas. It was a very pretty looking place, and it was in a great neighborhood. 4 bedrooms, 2.5 bath, a 2-car garage. And I even bought the property from a great provider a few years ago. I bought it just after the height of the mortgage meltdown for $153,000. The rent income was $1,575, so I had my 1% RV ratio. The PITI upon purchase was $1,000. Okay, PITI is the monthly principal, interest, taxes, and insurance payment that I had to make to the bank. After my maintenance costs and projecting an 8% vacancy expense, it cash flowed about $300 on paper, okay? Meaning that I would have $300 of monthly income because the rent income was going to be $300 greater than my expenses. So here's the thing. When I wanted to buy it a few years ago, my provider in that market put up a red flag, and she said that the neighborhood that the property was in is in a submarket further out of the metro center. And also, the property was in the back of a subdivision where you kind of had to make all these little turns to get back to it. And she let me know before I bought it that that area has kind of a really high vacancy and that I should avoid it. She basically said, "Don't buy it, Keith." You know what? I just didn't really want to hear that at the time. I wanted to move some equity into another property like this and just get the deal done. There were a few other $100,000 properties in the market she was offering, but I didn't want to dink around with a loan for just a $100K property. A $153K property was really barely large enough for me to want to mess around with. I do own several $1 million worth of property. So to me, this was just a little deal, and I just wanted to move this along and not heed my local property provider's advice. I mean, I basically just ran a stop sign on that one, okay? And I didn't take her advice. A provider that would know, because she's in this market every day. She has that local, street level, subdivision level knowledge. All right, well, after I owned it a couple years with, the long vacancies inevitably that did happen between tenants, and that was getting kind of old to me, the next thing that happened is that the Texas county that this property resides in raised the property taxes 32% at one time. 32%. I've never had a raise of that magnitude happen in any nation or state where I own investment real estate. A tax protest with the county went nowhere, so now my $1,575 rent has a PITI expense of $1,300. So even if the property was occupied, my cash flow would be zero, and we had a difficult time attracting a tenant. So a few more months of weathering that with no end in sight, I sold it. All right. By the way, I did sell it for $165K. That was $12K more than I bought it for. And I did sell it to an all-cash buyer, so we were able to close pretty fast. But even though I sold it for more than I bought it for, it didn't work. After paying the seller agent a 5% commission and some closing costs, there really wasn't any capital gain either, and I lost money the months that I held on to it as well. Now, I could have afforded to hold on to the property. I could afford to hemorrhage those dollars every month, but when I'm feeding it, rather than it feeding me like every other property I've got, well, that makes that a liability, not an asset. Collect cash flowing assets. Yeah, it was time to summarily jettison that joint out of the portfolio. So my formerly undefeated win-loss record got dented. Instead of being 30 wins and 0 losses or whatever, now I'm 29-1. So just go ahead and hang the big L on me for that one. I do have a friend that bought a couple properties from that same provider in that same market, and it's going okay for him. He bought where the demand is high enough for good occupancy. He's closer to the center of the metro, and so he's got some positive cash flow. So basically, listeners, my actions are congruent with my advice. I practice what I preach. I tell you that you should only buy a property that provides positive cash flow. Well, mine became a negative cash flower, so I sold it. I only do myself what I would tell you to do yourself. And believe me, it doesn't take some hero in this case to practice what I preach, okay? It's not a totally altruistic move. When it causes more monthly financial strain than it does gain, well, it's not hard for me to want to sell it, okay? Now, it's no huge deal. It was a totally surmountable loss on a smaller property, but it is a loss after all. And importantly, it's a lesson learned. The thing is, with every property, with every deal, you either get the profit or you get the lesson. Yeah, you either get the profit or you get the lesson. So luckily, I'm receiving the profit every other time. I'd rather get the profit than the lesson, and luckily I typically do. I guess another lesson learned is I don't think I could have done anything about that tax increase, but back when I wanted to buy it, I should have heeded the property provider's advice in the first place to not buy that one. So a lesson is to trust in your team. The provider that lives in that market, lean on them. They know what properties have tenant demand and what does not. That's what matters. I've already told you here a number of times before that the team of professionals that you engage with is more important than the property. It's also important that when you're in a losing situation, don't try to hold on just for ego reasons. Cut your losses. You limit your loss that way. Hey, and there's nothing wrong with Texas. Texas cities are generally good investor markets. Dallas-Fort Worth, Houston, San Antonio. I'm bullish on Texas real estate investing. Austin doesn't work as well as some of those other markets, but the market wasn't the problem. The sub-market was. I ended up selling that property to an owner-occupant family, a family that's going to own and live there. It's a great place for them. It no longer worked as an investment. I wish the new homeowner all the best there and opening presents underneath a Christmas tree for generations. So, hey, well, Tom Hopkins was on the show 2 episodes ago, and what we did is we recently put a link there on episode 12 show notes so that Get Rich Education listeners get a discount on Tom Hopkins International's Sales Academy in Orlando, February 20th and 21st. Yeah. So rather than you paying the usual $695 or $795, GRE listeners get tuition to the 2-day event for just $545 when they buy through that link. So I'm really happy to bring you that. When I hook you up with my contacts like I did there at Tom Hopkins International, I try to negotiate for a group discount for all of you listeners. And hey, if that's not enough incentive for you to want to go, my right-hand man here at GRE, John Collins, is going to that event. So you'll get to meet John. I can't make it down there that weekend. You've heard me mention John at the end of a couple shows. He's the business developer here. He's actually my very best friend. He's a great guy. He's a kind guy. He helps me organize the guest appearances here and other things. Well, if John is flying all the way from Anchorage, Alaska to Orlando, Florida for this event, you should consider it too. It's a big event. Sales is the most universal business skill. Yeah, get rich skill that there is out there. So if you want to go, email John at john@getricheducation.com. That's JOHN, and he might have a condo hookup for you during your stay there too. We've learned that the hotel block for the event is already booked, although you can still try. Or you can let us pay for the accommodation. GRE rented a full Orlando condo for the event. That's where John is staying, and there are a few open bedrooms in the place. And you can get one of those on a first-come, first-served basis by emailing John, so the stay can be on us too. It's 3-night stay in GRE's 1,800 square foot rental condo there with some really nice features, 2 living rooms, access to 2 pools, a clubhouse. There's an outdoor terrace with this nice little water view. So your tuition is discounted with the link for GRE listeners. That's an instant ROI to you. Plus your stay can be free if you email John right away for details. And you'll get to meet GRE's good-looking, affable John Collins. So John probably hopes that I stop talking about him at this point. John, the further I go on, the more that you have to live up to. But you always do. So speaking of getting to know us, thank you for the emails you've been sending me. I've responded to every one of them personally. Oh, and we don't put your email on any sort of marketing list or something lame like that when you send us a message. Of course, we wouldn't do that. So you can email me to tell me what future show topics you want to hear about. And you can send that email to me at keith@getricheducation.com. That goes straight to me, and for a while, I will personally respond to everyone. Put a like on our Get Rich Education Facebook page, too. There's actually a new photo of me on our Facebook page. There's the microphone in front of me while I'm producing a show, so you can see my typical recording environment and everything. So we want to make ourselves accessible to you in person, through our podcast, on Facebook, through email. So yeah, so that we can help make you more successful than us, faster than us. You know, I've talked about mentality a lot on the show. Part of our abundance mentality is giving. Coming up, I'm planning a show on telling you more about me too. With this show, I've said right at the beginning of episode 1 that you're not here for me. You're here for you. But I've been told that I really do need to do a show about me. I think I'll call it About Me and Anchorage, Alaska, or something like that. Hey, we also got great feedback on episode 10, Vocab Rehab, where I tell you how to talk like an investor. Some people dispense investor advice to you like you already know some advanced investor terminology, and that stuff just gets you lost. So I might do a show like that again on episode 20. That way you can refer back to every 10th show for the basics. I want to bring on some more good turnkey real estate providers for you like I did in episode 8, but a lot of providers currently don't have any inventory. Right now I know of turnkey real estate providers in Dallas, Atlanta, Memphis, Philadelphia, and other markets that have zero available inventory. Word has gotten out that turnkey real estate investing is relatively easy for investors, and it provides them with a great return. So I'm not just bringing any provider onto the show either. Just like any other business out there, not all turnkey real estate providers are good ones. And one of the good ones is Memphis's MidSouthHomebuyers.com. Those are the ones that we had on for episode 8. We've also got some other great guests lined up for future episodes, and we've got one today. Anthem Blanchard is the owner of Anthem Vault. It's a gold and silver storage vault in Utah where investors like us can take a convenient fractional ownership into physical serial number documented gold and silver bars that they securely store for us. They document the serial numbers on their website. You can buy and sell an ownership stake in these precious metals rather than having to physically move the bars around when you trade. And if you have a high enough ownership stake so that you own an entire bar, they'll even send it to your home because it is in fact your bar. I was a little bit leery about this concept originally. As you can imagine, trust and security is key. Well, given the Blanchard legacy, it's difficult to imagine a more responsible custodian, so it really was time for a business like this. I like gold and silver because it's a real, tangible asset. It's something that's always had value. It's highly liquid. It's a great inflation hedge. And I'll just tell you, it makes up almost 2% of my personal portfolio's value. I don't own more of it than that because there isn't any leverage, and it doesn't pay me to hold on to it every month like cash flowing real estate does. With the way that major world central banks are just printing money like crazy these days, I think there's a place for a little bit of precious metals in every portfolio. Well, here's Anthem Blanchard to tell you more right after this. Are you looking for an investment with the potential to offer monthly cash flow and tax advantages? While prices fall at the pump, now could be the time to invest in oil and gas. In business for nearly 30 years, Reef Oil and Gas Companies has endured price fluctuations and understands the importance of creating opportunities by purchasing oil and gas properties during distressed times. Primarily focused on the Bakken Three Forks of North Dakota and the Eagle Ford Shale of South Central Texas, Reef's model is designed to generate revenue and provide tax advantages from the production of oil and natural gas. For more information on this investment opportunity, go to reefogc.com. My guest today is Anthem Blanchard. He's the owner of Anthem Vault, a gold and silver storage service company. Anthem is what some might consider part of the first family of metals investing in the United States. And Anthem has had dozens of TV appearances, including on CNBC and the Fox Business Network and Bloomberg. And his news coverage has included the Wall Street Journal and Huffington Post. So welcome to Get Rich Education today, Anthem.
Thanks, Keith. It's great to be on your show.
Yeah. Now, you and we last sat down for breakfast in Las Vegas last month. I just found it kind of interesting that you told me that a lot of times your wife does your makeup before you go on TV for those appearances. And we actually met for the first time at the prestigious New Orleans Investment Conference, a conference that your influential father actually founded. Tell me a little bit about the influence and the legacy of your father, Jim Blanchard.
Sure, and I'd be happy to, Keith. He was quite a maverick, quite a pioneer. He was very disheartened when the government took precious metal, real money, out of circulation completely in the 60s when they took silver out of the quarters and dimes. And really that kind of began his foray. And he started to question things like, why is it illegal for Americans to own physical bars of gold? What's so dangerous about this? And so it made him question more, and he became an activist. And he went out there and he held press conferences. My father was actually a paraplegic. He got into a near-fatal car accident when he was a teenager, and he didn't have the ability to use his legs. And yet here he was, this bold man that smuggled gold in from Canada, that dangerous gold bar from Canada, held press conferences, ended up getting picked up by the three major television stations in the 70s. And from there in 74, President Ford signed the bill that was passed by conference that ended gold ownership prohibition that had been in place since 33. And actually, this month is significant, Keith, because it marks the 40th anniversary of gold legalization. So December 31st, 1974 was when that prohibition ended. So this is a really significant time, and we think now more than ever, people are really understanding the importance of having true money like gold.
So here we are in 2015, 40 years later. So fast forwarding to today, why is gold and silver worth so much money yet today?
Well, I think it's a frustration amongst a lot of PhD academics because it really pulls their hair out. Why is this gold money? It's just doesn't do anything, yet for thousands of years it's been in this quote-unquote bubble of people claiming it's worth something. And I think the reasons are very simple. So ultimately with money, you want money to be very liquid because you want money to be very stable, right? Because we already have enough of a challenge with the goods and services that we sell and pricing it. We don't want to have to throw in another variable to think, well, what is this money actually worth on top of the good and service? It doesn't really make much sense. And so with almost every other commodity, most monies are usable, right? We put oil in our car, we put copper in our wiring, and gold is unusual in the sense that the vast majority of gold is actually kept as a store of value, and silver is a bit unusual as well. It's about half of silver is roughly kept as a store of value, with the other half being used for industrial purposes. And so you ask why, and very simple reasons. One, historically, gold is a unique color, so really easy to tell the difference. And that's kind of been negated now. It's easier to tell if it's a different metal using technology, but still important. It has the lowest melting point. That means it's the easiest to make into coins, into bars, takes the least amount of energy, most efficient that way. So another reason. It's found relatively equally around the earth, as opposed to some other metals like platinum, for example, where you find a heavier abundance in places like South Africa or Russia. So there are these very simple reasons, and because it is so liquid, you have relative price stability, and central banks around the world all keep it as a reserve asset, and it's really the only liquid physical reserve that all central banks keep. So you have these very simple reasons. Billions of people already hold gold in some form or another, and it's something that we need some kind of medium of exchange in the world in order to have trade. And so you look at your options there. Ultimately, you want to use other metals that are better for industry, and ultimately it's going to make real money like gold less volatile. So it's really actually incredibly simple why gold and then silver are money. Silver was also some similar reasons. Silver was relatively easy to differentiate versus other silver metals because of the patina, or that black tarnish that you'll see sometimes on silver. So that makes it very easily recognizable. Also, typically gold and silver, when you mine them, you find them a lot together, gold, silver, and copper as well. So these are all reasons why, but gold was better money because it was scarcer. So when you had to physically move around a lot more, you didn't have like digital titling, for example. It made it a lot easier to move around gold, a lot of value of gold, because it took 10, 20, I mean currently gold is about 70 times more expensive than silver, but even historically when it was more around 15 times or so, still 15 times more value to lug around. So these are all the reasons why gold and silver have been the world's most trusted money since the beginning of recorded human history.
Yeah, there's some great reasons. And one reason that I always I don't often like to answer a question with a question, but when one asks me, why is gold worth money? It's easy to say, well, why is a dollar? Why is a euro? Why is a yen worth money? So one can sort of think of gold or silver as the least worst money or the least worst currency. It's something that's had value for millennia, and it's a very durable asset class, just like my favorite investment, real estate. And when it has long-term durability like that, I just like the fact that neither real estate nor metals can really go to zero. And I don't know if all of our listeners understand, it's really a better buyer opportunity today for gold and silver than it is now versus 3 to 4 years ago. So what's the recent spot price look like for metals?
Yeah, so you're looking, spot, and so when you hear spot on the radio, television, newspaper, internet, you're really looking at a very large commercial rate between banks that we all price off. So right now it's about $12.25 roughly spot for gold. Silver is around 16 an ounce. And so you're looking at that. So when you're buying retail, figure that you're going to pay a few percent over that, depends, or maybe less if it's a very large order. So That's typical. So you're looking at recent highs in the last 5 years. Silver got all the way up to near 50 in April of 2011, and gold got all the way up to $1,900 an ounce in September of 2011. So we like to buy things typically when they're on sale and they're on discount. And it's interesting psychologically that people tend to buy investments and put their retained earnings into asset classes or investment classes when everybody else is talking about it and it gets popular. But usually that's the worst time to get into a class because that's when everybody's in. And if you don't have buyers, then who's going to buy to keep that price up or go even higher? So that's really important. Gold is really out of favor right now from the investment community in general. And I would say relative to where it was, especially 5 years ago or so. That means it's a screaming buy opportunity because when you hear everybody talking about it, that's not really when you want to get into the asset class. So it's a great opportunity to get in right now.
And more recently, over these past few months, we've seen the dollar strengthen, which is of a surprise to some people. Maybe you can tell us a little bit about how the dollar strength reflects itself in the metals price that one pays.
So it's unusual in the sense that typically when you see dollar strength, historically, you've seen gold weakness. And we definitely saw a little bit of that in 14, but not much. I mean, gold went down, it was only down about a little under 2%. It was about 1.8% of the whole year of 2014, while the dollar strengthened against every single major currency out there. I mean, there was literally, I think the Somalia shilling was one of the only currencies I saw that actually strengthened versus the dollar. And that's just
I don't have any of those.
Well, there hasn't been a government to print a lot of them in recent times, which is probably telling. It's interesting. And I think what's important, maybe not your listeners might not understand this, but really ever since World War II, the world is a dollar world. We live in a dollar world. And so even though we have these other currencies that other countries have, at the end of the day, when you really actually start analyzing, they're really all backed by dollars or dollar denominated debt or other types of dollar assets, you could say, or maybe what your listeners maybe refer to more as a liability. So the banking system I consider a treasury, an asset, but potentially, but it really is a liability. So it's important, I think, to understand that, and I expect actually we're going to continue to see dollar strength for the foreseeable future until we have a complete loss in confidence in national currency. So I don't know when any of these events are going to happen. It hopefully takes a long time, hopefully decades, for there to be any kind of real loss of confidence like that in paper currencies, but national currencies. But we don't know, and that's why it's important to protect yourself. And this is a way gold and silver have always been protection from governments inflating their currency and having issues in banking systems. And what's really cool about our company, Anthem Vault, is that we let you actually do even more with it. So make your gold spendable, for example, so you can use it like PayPal in your bank accounts, but actually physical gold, you can buy and sell increments as little as $25, sell as little as $1, buy and sell as much as $5 million per order. So gold is incredibly liquid, silver, they're very liquid markets, and it's really cool to see a renaissance. Technology being able to make gold and silver, once again, really useful currency.
One thing that makes metals attractive that I like so much is one can own a tangible physical ounce of silver for about $20 or so. And it sounds like that is reflected in Anthem Vault as well, that one can get in and have an Anthem Vault account for as little as $25. But how does a typical service look for an investor? Say that an investor wanted to get some, what I call money insurance, which is sort of a way to think of gold and silver. What if we had an investor that wanted to invest $5,000 or $10,000 in, just say, gold and silver equally in Anthem Vault? What would that look like for the investor?
It's quite simple. It should take them less than a minute to open up an account with us, which is free, no minimum purchase. So you can check it out, open it up, see, look around, see if you like it or not. And then if you are interested, you can easily place an order. We actually accept up to $10,000 per day via direct withdrawal electronically from your bank account. So you don't have to hassle with the bank. You don't have to worry about writing a check or putting your credit card numbers in. So it's very, very simple that way. And legally, you own it as property and as an asset. And while this might not sound like a very interesting topic of conversation, it becomes crucially interesting when you're in a court of law, because the judge will basically determine based on property law. And property rights are your strongest rights as an individual in any country that was originally founded by the English. We call that common law. So it's always best to be in property. Now, the challenge has been typically when you've been in your stock brokerage account or in your bank account, you've typically had to give up your property right historically, and you get what's considered a liability. Money's owed back to you legally. The problem with the structure is that if there is stress with whatever institution you have finances with, or potentially the underlying currency, or potentially the structure that that institution is part of, that the issue is that your rights are minimized because you do not have the first right to your investment. It's a pretty incredible notion, but that's what makes owning physical metal, even though it is fractional owned metal in the sense that people can own parts of a bar, bars, along with all of our other clients that we store securely for them in a commercial grade vault that typically you'd have to be a multimillionaire to vault in and have Lloyd's of London grade insurance on that. And so we make that accessible to someone that even only has $25 technically, or a few $1,000s. So that's what's really exciting. It gives you the power of gold and silver as a store of value, and as no one else's liability. We don't own the metal. You own the metal. Your client owns the metal. But being able to have that liquidity that we enjoy in our bank account or our stock brokerage account, that's the power of Anthem Vault.
Sure. And gold and silver, since it is about the most liquid asset class I can possibly think of, what does the exit strategy look like for an investor that wanted to cash out of their Anthem Vault holdings rather quickly?
Super simple. I mean, in theory, if they want to, it can be a 24-hour turnaround time. So they go into their account, sell. Again, they can sell up to $5 million per order. They could place multiple orders in their account, even if they had $50 million or $100 million in their account. So that's how liquid the gold market is. And so, it's very, very simple. That's where I would say there is a little bit of a difference, and you can start kind of differentiating some of these different physical asset classes in the sense that in real estate, you might be in a really hot market. Maybe you can turn around that house in a week. And eventually, if you drop the price, you're going to find a buyer likely, unless maybe you're in a place like Detroit. I don't know. But even now, right, those markets are turning around. So gold is a little different in the sense that you can pick it up, right? You can't haul a piece of the earth around somewhere else on the earth. It right doesn't really work. So, but gold you can. So it is portable. So it makes it really easy to sell. Really easy to move around to another jurisdictions if the government, where in our case is Utah, and we'll be opening up vaults around the world as well. But if a government got funny about metal or some kind of property, well, it's real simple to transfer it around the world. So these are some of the unique advantages of having a portable physical asset like gold and silver.
Well, let's switch gears for a minute, Anthem. I know that you were at the Consumer Electronics Show in Las Vegas lately, and you're fairly tech savvy. So what's a really useful investor online resource or app that you like that one of my listeners might benefit from knowing about?
So every morning when I wake up, I go two places. I go to Bloomberg in the Bloomberg app, and I find that's very instructive. And then I go to zerohedge.com, and I find that very instructive. And basically what that gives me, it gives me two opinions and kind of from two different areas. And Bloomberg is pretty much, in my opinion, the best news source. You can really, Reuters and Bloomberg, but Bloomberg is really nicely organized. So from a mainstream perspective, it's great. And I think for an alternative perspective, Zero Hedge is great because it'll give you sometimes some of the under the hood look. Sometimes some of the articles can be a little bit overly technical, but you can almost always find articles on a daily basis. It's one of the most prolific blogs I've ever seen in terms of the amount of content they put up there. So those are two places that I check religiously every morning, and they're great free resources.
That's a smart thing to say, because I think those resources approach things from different angles, and to truly understand something, you need to be able to get the perspective from a lot of different angles. What are the best things that you know of that you can purchase for less than $100 that would have the greatest immediate impact on my listeners' lives?
I think at this very moment in time, obviously it's going to sound biased because we sell gold and silver, but the $100, I would say silver is a pretty wise bet at this level. I mean, you figure it's about 2/3 literally off of its high of 4 years ago almost now. So, and really you've had all this printing. It's essentially, you've had a lot of hope in the financial system that all this printing would eventually make the economy much stronger. And I think that's why we've seen a lot more strength in the stock market the last 5 years, especially, and why we've seen more weakness in gold and silver. But ultimately, if you don't believe the narrative that printing money is a panacea for all problems, then eventually gold and silver are going to increase substantially. And so I think silver, if you had $100, I think silver is a great place to put it.
I'm right with you. The last 2 years, I've certainly bought more silver than I have gold, just because I really feel like I'm going to exploit a greater arbitrage going forward. What ideas and information would you have for a young 23-year-old investor today?
I would say, so I'm not a CFA or CPA or CFP, but I do invest my own personal money. I have now for over a decade and been pretty successful with it. So I would say this, I would say take risks. When you're younger, you don't have kids typically, you don't have dependents. This is the time to take risks, number one. So I'd say start your own business. It doesn't matter what your business is. It doesn't matter, if it's tiny, but start your own business. And that's a great way to take risks. Actually, you turned me on to a really interesting idea of these FHA loans and only having to have 3% down. That sounded really interesting to me. Another thing that I like to do, it is very risky, but you can get upwards of 15 times leverage, which if you're only starting with, $1,000 and to make it worth like you're trading $15,000. Another interesting thing is options and to start studying options. And I know that there's some rich dad expertise. I think Andy Tanner is a guy that is a rich dad educator that touches upon options of some. And I just think they're really powerful. They're very speculative, so you have to be careful. But ultimately, ways that people have made a lot of money with a very little amount of money. And other ways I've seen too is penny stocks. And it takes, again, any place you have a chance of high reward, you also have high risk. The two come together, they can't be avoided. But if with enough homework and enough experience and smart risk taking, ultimately, what's your worst case scenario? Okay, you fail on that bet, so you make another bet, and you fail on that bet, and you make another bet, and you fail on that bet, and you make another bet, you fail on that bet, and you make another bet, and you hit that bet, and now you're just up 10 times. So yeah, you might have lost maybe half of that before, but hey, now you're up over double, well over double, 5x more than you were when you first started failing, quote unquote. So that would be my biggest suggestion to your audience and to younger members of your audience specifically.
That's great. I think that gives them a lot to chew on. Anthem, how can my listeners find out more about you and Anthem Vault? Check us out,
anthemvault.com. So Anthem, like the Ayn Rand book, like my name, like the national anthem, Vault, V-A-U-L-T, anthemvault.com. Check us out. We're pretty pervasive on social as well. You can check us out, Facebook, Twitter, and yeah, find us there, call us. We're really, really friendly. We love talking with people. We pride ourselves on really being one with our clients and really wanting to increase functionality and really by listening to our clients and making our product as valuable to them in order to make their metal as valuable for them as possible. So yeah, please check us out. Call us 855-4-AVAULT. So it's 855-428-2858. And I really, really appreciate the opportunity to get to speak with you and also to get to speak with your audience. So thank you.
Thanks for coming on to the show today, Anthem.
Appreciate it. Thanks, Keith.
You've been listening to the Get Rich Education Podcast, telling you what the wealthy won't tell you about real estate and investing. If you enjoyed the show, please take a minute to visit iTunes and leave your comments.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.